Good morning, traders. Richard Miller doing a quick Ichimoku Cloud chart market review of the S&P 500 index. We'll start off with the weekly Ichimoku Cloud. We can see the market is still a little bit extended from the top end of the cloud. We can see just looking at the price action up here and the distance between the price action and the cloud. And there's always a risk of a bit of a consolidation or a brief pullback similar to what we've had here and similar to what we've had there in January and then again in September. So you can see all these little pullbacks at the top end of the cloud. So the market's a little bit extended, so that adds to the additional risk in the market. Levels to watch out for is this turning line here, 38.32, key support zone. Front end cloud chart support zone, 37.25. There's downside risk to that level, and we can see this level. We had a nice little rebound from that level, so there seems to be quite a lot of support in around the front end of the cloud, even though it is a little bit extended. At some point, this turning line is going to, a standard line is going to catch up, and that's going to coincide well with a support zone at the front end of the cloud. So watch out for these levels. Downside risk to 3722, as well as this turning line 3836. So watch out for those levels in the next couple of weeks. Now turning to the daily Ichimoku Cloud. Lovely rebound from the top end of the cloud. You had literally dipped in, almost touched the bottom end of the cloud, managed to rebound from these old support levels, as well as this standard line here. We can see that level 3729 came in play as a key support zone, and that can be a support level on the way up. You can see there's another big one here. It's interesting that we did support did not hold. It was tested twice, third time struck through, managed to rebound from an older support level as well as close to the bottom end of the cloud, rebounded, and then took out that high. Now, once again, we're a little bit extended from the top end of the cloud on the daily. Consolidating, pulling back. Now, interestingly, levels to watch out for is the front end of the cloud for support, 3894, top end of the cloud here at 3870, and that coincides well with a standard line of 3854. So there's a cluster of support in and around these levels at 3852, 3860. So watch out for that. Any kind of weakness could pull back and rebound from that level. Major support zone is obviously this level, 3822, and the front end of the cloud, bottom end of the cloud, 3792. So these are major support levels to watch out for on the daily. Any kind of swing trade from these levels would be great. But downside risk to the top end of the cloud. But so far, price actions above the cloud, that's bullish long term on the daily. And so far, so good. The S&P is in a little bit better shape than the NASDAQ, looking at the Ichimoku Cloud. Let's turn to the 4-hour chart. Fantastic rebound here from the old cloud chart support levels here at 3731. And then again, that level as well. Also a cluster of support at 3766. So that was a nice rebound trade. Back up, managed to break through the bottom of the cloud, ran into resistance at the top end of the cloud, snapped back, rebounded from the bottom end of the cloud at 3822. And then we had a nice little rally, broke past the top end of the cloud, which is a front cloud resistance zone as well, 3939. Yeah, you can see there's a support zone. So 39 front end of the cloud is a support zone. Any weakness to that level can be seen as a swing trade. And on a very weak market, we can dip back into the cloud and retest 3855, and that coincides well with this standard line 3852. So watch out, there's a kind of a major support zone, front end cloud support, as well as turning line, a standard line support. So there's downside risk to these levels, top in the front cloud, and then this cluster of support. So those are the key support levels to watch out for any weakness, for a potential swing trade back up from these levels. But we're now fighting to see if this old high is going to come back in the support. But so far, price action above the cloud, that's bullish. Did have a little bit of a MACD sell signal here, so we might see sideways moving and a retest of these support levels here. But so far, so good. Price actions above the cloud, and that's bullish on the 4-hour. Turning to the hourly chart, let's look at it. A little bit of a situation here. Front in the cloud is showing that we might see a little bit of weakness to the downside. Key levels to watch out for in the hourly is 3899, as well as this one 3929, and then 3899. If support fails at that level, we could retest these levels within the cloud. But price action is still above the bottom end of the cloud, as long as it stays above that level. Ideally, you want to see it above the top end of the cloud, yeah, but it's still, these levels are major support zones on the hourly. And it looks like the market might just test that 3935 and then rebound from there. Interesting that that level is coinciding well with the front end cloud, uh, bottom end of the cloud or the front end of the cloud. That's a major support zone. And if price action dips below the cloud, outlook goes from bullish to bearish, and then that becomes a major resistance zone. So far, critical week ahead for the S&P to maintain its upward momentum and rebound from the bottom end cloud chart support levels of 3935. And then this level you have 3928. So watch out for any kind of rebound from these levels and then a continuation of the trend. But just back to the daily, let's recap there quickly. You can see there's front end cloud levels to watch out for: 3895 support and 3868. So these are key support levels to watch out for any potential rebound or any kind of weakness in the market. But so far so good. Price action above the cloud. We've had a MACD buy on the daily. So far so good, slow and steady, but we can expect a test of these levels, and that can be another entry point for a swing trade. But so far so good. Markets are, the S&P is still firing on all four cylinders, and after a retest of these levels, there'll be a nice swing trade back up to higher levels. But critical week ahead for the S&P to either rally from this old high and show that that's a new support zone. If not, then we'll test these levels briefly and then rebound from those levels. Until next time, happy cloud chart trading.